Hello, everybody. Welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As we get started, let's just do a quick systems check. If you would, type OK in the question box if you're hearing me clearly and seeing my screen all right. Okay, looks like we're up and running fine. If anyone has any issues as we go along, feel free to let me know. As always, keep in mind that each trade that you take has risk. There's no guarantee of profit on any one trade, but obviously there's a good potential for profits on each trade, and you just want to manage your risk in a way that makes sense based on your risk tolerance and balance, etc. So we'll go over some ideas in that regard, how the web trader itself can help you with the risk management. There are some nice tools built into it to assist you in that regard. And also keep in mind that what we go over is meant to be educational in nature and not to be taken as financial advisement. Now, real quick, for anyone who's new to things before we get on the live charts, what is fundamental analysis? Basically, it's looking at the news and how it relates to what you might be trading on. And so we can look at economic calendars for regularly scheduled events, releases of data, etc., that could give you some idea based on past movements around those announcements, how you might expect future movements to occur. And we'll look at a few examples of that for announcements that are coming in today and maybe an announcement or two for tomorrow. Give you somewhat of a plan for some announcement trading that you could do. And then there are other types of data as well that comes in terms of fundamental news. And some of it is from unexpected headlines, what we might call extraordinary economic events. Yesterday the fear was about a couple different things on the market that were fundamentally related, and they were more in line with regular economic events, but kind of in an irregular, extraordinary situation. And to explain what I mean by that is, one of the things was NVIDIA was reporting its earnings numbers, and they've done so well over the past year plus with huge increase in stock value, huge returns, that there was fear that if they missed on their returns, there could be maybe a large pullback, and NVIDIA was actually pulling back in the lead up to their numbers being released yesterday after market hours. And it's maybe not the normal circumstance for such nervousness around one company who's actually been doing so well to be so nervous about it, but it's because of the extraordinary gains that particular stock has had in relation to the AI market that they've gotten into. And their numbers actually beat the expectations, and all the nervousness seemed to be out for no reason. Those of you who bought the dip could have done well, perhaps with today's market open. We'll see what NVIDIA does, but their numbers exceeded expectation, and we see in the futures on our major indices a huge bounce that occurred partially because of that. Then the other situation that is maybe more extraordinary in nature was there were FOMC minutes that were being released yesterday, and those are minutes on monetary policy, basically notes you could call them on monetary policy from the FOMC committee in the U.S. This is the group that helps determine what the monetary policy will be moving forward for the U.S. And there was a lot of fear about what that might say. And it actually, when the minutes were released, it fed further into that fear, and there was more of a sell-off on the equities, especially because basically they're saying in the U.S. they're not going to lower interest rates anytime soon until there's more evidence that the inflation problem is going away. And so unless inflationary data starts to come down more than it has, I guess there's no expectation of interest rate decreases yet in the U.S. And the recent data out of the U.S. fundamentally has been higher than expected inflationary data for the CPI and the PPI numbers the past weeks as those have come out. So the fear on the greater market, aside from just fear about NVIDIA, was about what these FOMC minutes would show, and they showed exactly what was expected. The big recovery near the end of the day was more related to NVIDIA's numbers being better than expected, and that created some joy. But we can still expect that there's fear out there about the fact that the U.S. seems to not be on course to lower interest rates anytime in the coming weeks. So barring lower than expected inflationary data building up over the next weeks and months, interest rates look to be not to come down anytime soon. So that's kind of the fundamental news situation right now. And if we then go to our web trader, we can start to look at announcements that are coming in today for more specific information. And we also can take a look at NVIDIA and see where did it close yesterday, where might it open today when the U.S. market opens, and what are the opportunities surrounding that, potentially if you wanted to make a move on NVIDIA. Basically, the larger part of the tech sector dropped with NVIDIA, and so if NVIDIA is going to bounce, the futures market's already showing the NASDAQ 100, the tech group in general seems to be kind of bullish so far today. And that's kind of the general sentiment there. So let's log in on the web trader. You also could use the AvaTrade Go mobile app for all of the same features. And you can trade your MT4 and MT5 accounts from the web trader and our app, but with these advanced functionalities that we're about to use. So the fundamental news we can find in these tools here. Economic calendar is one place to go. So let's do that. And if we want to just look at today's date starting out, we'll click on the 22nd. And some announcements have already come in. Let's look at ones that have not. And so we can see the inflation rate data just came in a little earlier today in the European Union, and it came in exactly as expected. Inflation was expected to drop from 2.9 to 2.8. It did. That's year over year. Core inflation was expected to drop from 3.4 to 3.3. It did. Inflation rate month to month was expected to come down 0.4. It did. So in general, we might be looking at a little bit of a more bearish movement potentially on the euro. So we'll keep that in mind, that the data shows a slowdown in the European Union in the lines of what was expected, which is not what's been happening in the US. The US has had numbers coming in higher than expected. Okay, so let's look at what's yet to come today. So initial jobless claims, right? That's just in about 2.5 hours time from now. And so a high level announcement, meaning you expect high volatility. And when these numbers come in, if they're higher than expected or lower than expected, you tend to get a larger reaction on the charts than if they come in at expectation. Now, we don't have to just speculate that. We can use the tools here to analyze, well, how has it moved in the past, in the time following the past announcements. Okay, each of these is a date of this initial jobless claims announcement coming in. And you see it looks like half of them went down and half of them went up. So you say, well, how do I know which way to trade? Half the time it goes down, half the time it goes up. But if we qualify, okay, not just which currency pairing and not just how much time after the event, but if we qualify how the numbers came in, better than expected, as expected, below expectation. So if this data comes in, initial jobless claims above forecast, we see that 75% of the time, the USD strengthens and pulls the euro down. If it comes in below forecast, it's 50-50. Anyone's guess what the movement would be based on the past announcements. Sometimes up, sometimes down, half-half. Okay? But if it comes in above expectation, 3/4 of the time, there's a significant move down. once it went up. Okay, that to me looks like a nice statistical advantage. Okay, based on the past movements surrounding this fundamental news, these jobless claims numbers. And so my plan for this announcement would be, I'll wait and see how the numbers come in. If they come in above forecast, then I'll consider trading based on what kind of entry point I can get. I would consider maybe selling based on this data with a take profit maybe somewhere around 50 pips down. We see the average range movement has been 58 and a half or so pips. These movements you can see dropped 44, 42, and 41 pips. So my take profit, I would put about 40 pips after looking at these exact numbers from the past movements. Pretty consistently, they dropped over 40 pips all three times. The one time it went the wrong way, you have a stop loss maybe 10 pips up, and you don't have to ride this whole movement up for that big of a loss. So then the question is, well, if I wait for the numbers to come in and then place my trade, maybe I miss most of the movement. And the fact is, if you check 5 minutes after each announcement, the movements have gone less than 10 pips. Okay, average range movement 8 pips, and in fact, only one of them went down at all. This one went down 8 pips. This one went up. This one went up, and this one went up. Okay, so all of these in the first 5 minutes would have been nice entry points for what happened after 4 hours, which is 3 out of 4 of them dropped over 40 pips. And the one that went the wrong way, you could add a short stop loss and taken a small loss. Okay, so this data can be powerful. It shows you what you might expect based on the past in relation to how the numbers might come in today. Okay, so now the past is no guarantee of the future, right? It doesn't mean the next 4 announcements that come in above forecast will do the same thing, but at least it's something to look at in terms of statistics in the past to see if maybe those statistics will carry out in the future. Okay, and it does make sense. If these numbers come in higher than expected, that could create fear that jobless claims are rising in the US. Fear tends to strengthen the US dollar as a safe haven. Okay, not always, but many times it does. And so I can make a rationale in my mind as to why this occurs, but I also could just follow the data from the past without trying to answer the why. I can just show the what. And the what is 75% of the time in the recent history, there was a significant strengthening of the US dollar if these numbers come in above forecast. Okay? Now, if they come in below forecast, I'm not interested in trading. It's 50-50. I don't see an advantage there. Okay, if that makes sense to you. Any questions on that? I'll just pause for a moment. Okay, and if I see any questions pop up, I'll address them as I see them. Okay, so what else is coming today? This Canadian announcement, these announcements here on retail sales are at the exact same time as the US announcement. So the US announcements tend to create bigger movements, higher volume of trading than the Canadian announcements. So, if I was trading Euro USD or USD Canadian, I'm probably going to trade the Euro USD, keep the Canadian out of it, right? And then if I'm trading the Canadian, I'll probably trade a Canadian pairing that doesn't involve the USD. So something like Canadian JPY, okay? And we can check that out so that the US announcement doesn't necessarily mess up my Canadian movement, okay? It could even be Euro Canadian. So if we take a look at something like that, Euro Canadian, rather than USD, because we have the US announcement at the same time, now we can see, is there any advantage on retail sales? If this comes in above forecast, 67% of the time, the euro strengthened against the Canadian, okay? And if this comes in below forecast, 100% of the time, the euro strengthened against the Canadian. So it's almost regardless of how this comes in, when these numbers come in, whether they're good or bad, higher than expected or lower than expected, the euro has strengthened. But more consistently, it strengthened when it came in below forecast, which would make sense. Retail sales below forecast kind of means bad news for the Canadian economy. So it would make sense the Canadian might weaken against the euro. And in this case, 2 out of 2 times that happened, 100% of the time. If it came in above forecast, it was still going up, but 2/3 of the time. Okay, you can make what you will of that data, but there it is. And if the data speaks to you at all and makes you feel like that's something you'd want to act on, then you can plan to trade based on those numbers coming in. And you can compare. Maybe it's the month over month is less significant than the year over year. We can look at the year over year retail sales, and maybe the statistics make more sense in your mind. So if this comes in above forecast, again, it's 67% of the time. The euro strengthens. If this comes in below forecast, it's 100% of the time. Okay, and this happened 3 times now. So there's something consistently happening here where the Canadian is weakening. If the numbers come in below forecast, we can see that, and it kind of makes sense. Worse numbers than expected for retail sales, the Canadian might weaken. And for the year over year numbers, it was 3 out of 3. Month over month, it was 2 out of 2. So I might pay more attention to the year over year numbers because there are more data points. This has happened 3 times below forecast rather than just twice, and all 3 times it went up. So I might be looking at below forecast. If that comes in, maybe I'm interested in buying on the euro against the Canadian because it makes sense in my mind, not just that it's 100% of the time it went up, but it also makes sense in my mind that if it was below forecast, the Canadian should weaken against the euro. So I would probably selectively follow the year over year on that one, okay? Again, I'll pause. Any questions, comments on what we've looked at so far? Okay, and again, if I see questions pop up, I'll address them. And I believe there's something later today. Yes, existing home sales. Another high-level announcement. And there's been a focus on the housing market in the US with all of these high interest rates to see if or when sales might start to drop because of the high interest rates. And they're looking to see if there's some cracks in the economy showing in different sectors. And the housing sector is one where there might be some expectation that eventually here people are going to be maxed out with these high interest rates and just not be able to afford buying new homes potentially, or the prices would have to fall in order to afford them. So if we look and see if these numbers come in above forecast, if home sales are better than expected, we see 80% of the time the USD strengthens. Makes sense. Stronger than expected home sales in the US, USD strengthens for a couple reasons. One, because, hey, if the US is doing well, it makes sense to buy their currency. But also, if home sales are better than expected, then there's less likelihood that interest rates will be lowered anytime soon in the US, which then also not lowering the interest rates tends to keep the USD strong. Okay, the better the data, the less likely the FOMC committee in the US is going to see any reason to lower interest rates yet, because they want to bring inflation down. If the housing market's still strong, they don't want to lower interest rates yet because that'll just cause more inflation. So it makes sense here for a couple reasons in my mind. If these come in above forecast, better than expected home sales, that the USD strengthens, and it shows in the past that that has happened 80% of the time, 4 out of 5 times, with an average range movement of about 33 pips. And again, in the first 5 minutes, if you get your trade off, it's only moved an average range movement of 6 pips in that first 5 minutes. So it's not like it's too late to get your trade off, and some of them have actually gone up before dropping. So the largest movement down was 6 pips. Okay, these others were less or up. And then after 4 hours, 80% of them were down, and we're talking this one dropped 23 pips, 13, 10, and the smallest one is about 5. So the majority of them continued to move down further after the first 5 minutes. in the coming hours, after 4 hours, compared to where they were in the first 5 minutes, which some of them even were up in that time period or down very little. If you look at the scale here, all of them were less than 10 pips, less than 7 pips even. Okay, so a lot of fundamental news coming in that seems to produce predictable movements. Now, we looked at if it's above forecast, 80% in the first 4 hours, 80% of them dropped. If it's below forecast, look at that, almost 50-50. Only 57% dropped. So we're looking at a situation where if the numbers come in a certain way, in this case above forecast, there seems to be better predictability on how to trade based on the past movements with this announcement. Okay, so we've got 3 of them then today that you could be looking at: the existing home sales out of the US, the retail sales out of Canada, at the same time, initial jobless claims out of the US, maybe looking at a Euro USD or GBP USD pairing for this one, and at the same time, a Euro Canadian pairing maybe with this one, or a Canadian JPY. Analyze the pairing that you like best, and you can make a move if it makes sense to you. Now, we also could look at tomorrow. There are some announcements tomorrow. Like here's a business climate announcement out of Germany, high-level announcement. Some of them don't have predictable movements. Some do. If this comes in above forecast, 2/3 of the time it drops. Okay, so if this particular announcement comes in above forecast, I'm looking probably to sell here. If this comes in below forecast, it's closer to 50-50. So maybe I'm not looking to make a move. Okay, that's the sort of look that you can have at these. And maybe the GDP growth rate is more predictable, even though it's a medium level announcement and not high level. It still could have good movement because GDP numbers are pretty important. And so we could look at this quarter over quarter or year over year. Let's look at the year over year GDP. If this comes in above forecast, it hasn't happened in the recent history. If it comes in below forecast, it's happened 3 times in the recent history. And 2/3 of the time, you get a significant drop in the USD, or in the euro against the USD. Okay, if it comes in below forecast. And that kind of makes sense. The euro would weaken the majority of the time, 2/3 of the time, against the US dollar if the GDP growth rate is weaker than expected. Okay, and if it's above expectation, hasn't happened. If it matches expectation, the euro climbed. Okay, so we see it trends up if it matches expectation. If it's below forecast, a large trend down. And the one movement that went up less than the 2 that went down. So it's even greater than a 2/3 advantage in that regard. It dropped 2 out of 3, and also the drop was much larger each time than the one that went the other way. Okay, so all types of statistical analysis you can do with these tools to see where you think you have a statistical advantage, and you can watch the actual numbers come in and have the advantage of hindsight to already know what the data was that came in, and then place your trade based on the past movement within certain time frames from the past. And so you can already have outlined the direction you'll trade, how far your take profit would be based on the size of the past movements, how far away your stop loss might need to be, etc. Okay, let's go ahead then and look at maybe another tool. And we mentioned NVIDIA, so why not look at NVIDIA? So if we want to look at a specific instrument, we can go to the Market Buzz, and we can look at the most recent news and information that's been found on any instrument we're interested in trading on. And no doubt, NVIDIA is trending the most. Look at the size of this circle compared to the rest. They're all in a different class compared to NVIDIA, which is trending the most. 1,600 mentions recently online. These others are 57, 27, Microsoft 210, NVIDIA 1,600 mentions. So when the market opens in the US, I expect NVIDIA to have a huge amount of movement. Which direction? We don't know for sure, but it seems to be positive news that came in for NVIDIA with their earnings numbers being so solid. So If we start to look at NVIDIA, we can see the expectation. Price may rise. You don't see that very often, by the way. I'll tell you, I've looked at this tool a lot. Price may rise. 18.6% is the prediction, okay? And they're not talking about in the coming year. They're talking about in the coming days, right? Or the coming weeks anyways. So we see here, they've got a support level drawn. This blue line is a support level, a technical support level, where in the past it had trouble going above. You see here, had trouble going above. And then once it broke above, it became support, which is classic support and resistance theory from a technical perspective. Resistance, once broken above, becomes support. So they're saying if it breaks below here, then give up on your buy. So put your stop loss maybe below the blue line. If it does not break below the blue, they're saying take profits up near these green lines, up around 797 or slightly below. Okay, that's their prediction. Okay, the expectation. Doesn't mean 100% of the time this is right, but this is based on the current fundamental sentiment and also the current technical setup. Okay, potential 18.6% climb on the trend analysis. We also can then read recent articles about NVIDIA, okay? And you can see it, you know, AI leader NVIDIA rises as forecast tops Wall Street, okay? That's what I said starting out, that their numbers beat the expectation. You can see the synopsis here, or you can read the whole article. Click the link and it loads the whole article. AI leader NVIDIA rises as forecast tops Wall Street's lofty goals. By forecast tops the goals, they mean the earnings per share, the revenue numbers, both were higher than expected, better news than expected. So all that fear leading up to yesterday's numbers release for them, where NVIDIA was dropping, what do you think is going to happen now that these numbers were better than expected when the US market opens? Okay, so it's easy to read the tea leaves when you look at the fundamental news. Okay, so without knowing anything, how would you know which way to expect NVIDIA to go? But now that we did some quick analysis, both technical trend analysis and the fundamental news, and I could read more articles if I want, I already have a strong understanding from a fundamental perspective. Boy, I wish I would have bought on NVIDIA yesterday before the market closed, right? If I would have known what those numbers were going to be. But okay, now we know the numbers were better than expected. We know there's positive sentiment on NVIDIA now. So the question is, what next if you wanted to make a move with NVIDIA? So let's go to stocks, US. And let's see if, I don't know if it's on our MT4 and MT5. Let's check. Some of the stocks are only MT5. Here, let me check. Let me switch to my MT5 account. I know it's nice about our web traders, you can have an MT4 and an MT5 and seamlessly switch between them. There's no logging in, logging back out. You just switch accounts, and once it loads, you're in the next account. And so my MT5 account, which I actually don't have funded, but my MT5 account here, it's kind of a dummy account for me for the webinars. If we go to then NVIDIA. Okay, so you need to log into your MT5 account or add one if you want to trade on NVIDIA. So let's expand the chart. We can take a look at where is NVIDIA as of yesterday's close. And by the way, look at the 1 week candles. And if we go to 1 month, it might even look more impressive. One month candles. Okay, so the 1 month candles for NVIDIA, look at this climb from where they bottomed out here. Okay, this is a big drop during COVID and everything else across, and look at the recovery month after month after month after month. we're talking from under 200 to nearly 800, 750-ish in just a couple years' time. So what, 300 and something percent, almost 400% climb in stock value in just a couple years' time. So this is why there was fear. If their numbers missed, there could be a larger than normal pullback because of the climb that they've had. Okay. Now, if we go to smaller candles, go to 1 hour. Okay, we see the drop the past couple days. Okay, this is where it ended last week, hitting all-time highs. Okay, these were the all-time highs right here. Look at that resistance level. It was almost as if you knew something was coming. Resistance, 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 resistance. It could not break the top. Here was the support. Okay, so it was ranging. This is a ranging pattern, by the way, technical trend, where it ranges between two prices. So this was the support, this was the resistance. So resistance, support, resistance, support, resistance, support, resistance, support, again and again. And then at the open of this week, boom, broke the support. Okay, so anyone who sold NVIDIA back here, what a nice breakthrough. And if you had a pending order here below the support, a pending order that said if it breaks below the support, sell. Soon as it broke below the support at the open, you could have been in on a sell and been way in the money. Okay, so anyways, now we see the drop. Okay, we see that's Monday and Tuesday. The market closed here and opened Wednesday down and continued to drop, with yesterday's lead up to the earnings numbers. Right before the market closed, there was a bounce. Maybe the bulls, as they call them, those who like to buy, couldn't resist those low numbers, thinking that, hey, even if NVIDIA's numbers miss, it's a great company, and look at this big pullback from near 750 all the way down to 650 almost at this low point down here. So there was some buying right before the market closed yesterday in the US. We see this bounce back up, but still you see how far down NVIDIA is. Okay, look how far down NVIDIA still is compared to where it was last week. Okay, so even if today's market opens with a gap up, look how far it still could go if it's going to go back to its all-time high. So we're talking up near 750. You could have a take profit if you think it'll challenge the all-time high again. So take profit could be about here, 738, unless at the open it gaps all the way up to that point. It could. We don't know where NVIDIA will open. With the strong numbers that they had yesterday, after market close, I wouldn't be surprised if there isn't. I wouldn't be surprised if there is, I should say, a large gap up. We'll see. Now, if in some way, let's say it opens with a gap up but pulls back, maybe you have a spot that you think you'd want to get in to go with the positive fundamental news from their earnings numbers yesterday. But it's all about entry point at this with this particular move. If the fundamentals have you convinced, and I'm not saying you have to buy here, you could sell if you want, but if the fundamentals have you convinced that buying makes sense on NVIDIA, then it's all about when the market opens, can you get the price that you want? Okay, if it opens near the all-time high, I probably would have a hard time wanting to buy on that. Not that it can't break its all-time high. It's done it again and again and again for the past 2 years. But opportunistic entry point would be nice to catch it somewhere down here and look to take profit near the all-time high. But that's up to each individual trader. All right. Longer term traders wouldn't care if it gaps all the way up here. They might buy and sit on it for a few months. Okay, but it's up to each trader. But certainly the fundamental news says this will likely gap up at the open. How far, we'll see. And if you have an entry point you like, then maybe you make a move. Okay. And by the way, the greater fear is still there from yesterday. Not specific to NVIDIA, but in general, that interest rates aren't going to come down anytime soon. In most people's minds, that's what's thought in the US or about the US. And so maybe if this gaps up high enough, maybe you respect this all-time high and you think it might push back down with the greater fear that's there about the entire market, not specifically about NVIDIA. But that one might be tough. I might be looking for something else to short rather than NVIDIA, which just had really great news. It's hard to short a stock maybe that it had news that works against the move. But maybe other instruments you could look at to see if you can catch a high point with NVIDIA's momentum, but without them being the ones with those earnings numbers. So we might see other tech stocks jump because NVIDIA jumps. And if that's the case, then maybe you find another stock that jumped up today, but that didn't have the strong earnings numbers. Maybe one of the other companies like Google or Amazon or something like that might have an entry point you like if they temporarily ride momentum up with NVIDIA. And you might be looking maybe in the opposite direction with those if you like the price. Okay, so sometimes one particular company like NVIDIA can control sentiment temporarily, even if the greater picture is more bearish. They might bounce up with the positive sentiment from NVIDIA and give you an opportunistic entry point on other instruments to then be able to short with the greater fear about interest rates in the US. Just an idea. Okay, any questions, comments? Yeah, Alfred, NVIDIA is, the transaction currency is USD, correct. Because it's a US company. The European stocks would be, the transactional currency would be in the euro. Good question. Okay, so if we were going to place a trade on something, all right, we could look Euro USD, for example. And so why do I pick the Euro USD? And let's go back to my MT4 account, simply because I have that one funded. And so on the MT4, if we want to look Euro USD, okay, I already showed you the numbers out of the European Union when we were looking at the economic calendar showed that the numbers did come down in terms of economic data. They dropped as expected. Remember, I said the opposite in the US. The CPI data, the PPI data was higher than expected in the US, which strengthened the US dollar. The European data that we just saw came in today did show a slowdown in the European economy, as expected. So the euro could be somewhat bearish right now, and the USD bullish because of the FOMC minutes yesterday. So if we feel like the USD has reason to be strong and the euro has reason to be weak, then we could look and see if there's an opportunity. And the opportunity, you see this resistance level I drew from a prior session. Look how it hit that price and dropped. And this was just a few hours ago. So you could see the euro drop when that data came in today, as expected. You know, the numbers came in worse than expected, down went the euro. Okay, if we look at the larger picture, 2-hour candles maybe, okay, we see resistance level hit just literally a little while ago, hit the resistance and down it went with the weaker than expected data out of the European Union. You know, if the data that's coming soon out of the US again comes in better than expected, we could see a strengthening of the USD with that data. And if that's the case, we could see a bearish euro give more ground to the USD being pulled down perhaps to the next support levels down this way. Okay, so you know, real quick, I want to demonstrate how easy it is to do risk management along with your technical analysis. So if the fundamental news says, hey, I think the USD should strengthen and the euro should weaken, okay, great. Maybe I want my stop loss above this resistance level here. So if I put my stop loss here, say 108.66, 108.66. If I put my take profit at the next support level down here, then maybe I go 108.16. And so I can real quick see, based on where I want my stop loss above here, where I want my take profit right down here, I enter that in, and I can real quick see how much am I risking, 2,300, 2,400, how much would I make, 5,100 or so. Now I can adjust my trade size for the amount I'm willing to risk per trade. So if I want to risk, I don't know, 500 per trade. So let me go one lot. Now I'm risking 153. Okay, 3 lots. Now I'm risking 468. Okay, 3.5 lots. Now I'm risking just over 500, 539. So I can easily adjust, risk manage how I want. That's less than 1% of my balance, this amount of risk. Maybe I could even go with a larger trade if I want to risk 1%. How much you want to risk per trade is up to you percentage-wise on your account. But the key is whatever that amount is that you want to risk per trade, you can calculate it here in the order window before you place your trade. So now I'm risking just under 1% of my balance and can make more than double that if I hit my take profit. So if that's what I want, then I sell. And I completely risk manage the trade in terms of stop loss, take profit potentials right before I took the trade. So I don't have any surprises. Any questions, comments before we end the session today? Okay, great. I wish you all luck with your trading the rest of the day today. Maybe you act on some of those announcements we looked at or some others. And also take a look at the Market Buzz. It's a great place to find news about whatever instrument you're interested in trading on. Doesn't have to be just NVIDIA. That was just a single example I was showing you. But you can check anything out in the Market Buzz, including commodities and indices, etc. They're all listed in there to be able to analyze recent news and the expected trend like we looked at for NVIDIA. Okay, everybody, thank you. Good luck with your trading the rest of the week. Bye for now.